I can see who's all logged in. I think maybe rather, since we're virtual, rather than try to go around and do introductions, I think what I would ask is, for those of you on video, I can kind of see who's all here. I would just ask that as folks start talking, if you can try to remember to sort of identify yourself. I can see most of you and I recognize a lot of your voices, but so we have a good record of who's saying what, and I may have to stop and ask you. Then the only other question, I know it looks like we've got a couple people who are dialed in. So if you're on the phone and not logged in to the, the video, if you could briefly unmute yourselves and just tell us who you are and who you're with, that would be really helpful.
Hi, this is Courtney Johnson with HealthNet.
Sorry, I got Courtney Johnson, and who is the other person?
Rick Berry with DFR.
Hi, Rick. Anyone else just on the phone? All right, hearing none. So just kind of some real quick housekeeping. We are doing this video. This is a Teams meeting. This is a first for us as a division, so hopefully we won't have any major technical snafus. I would ask everyone if you can mute your lines if you're not talking. And it looks like, as I'm looking at the roster, it looks like pretty much everybody here is either with the division or is actually a committee member. So I'm not going to be too worried about it. The one thing I was going to say is, if anybody's not a member of the committee, meaning you didn't actually, you didn't get notice that you're actually on the committee, please identify yourself. And I think we'd like to hold any comments from non-committee members. We're going to try to do a little public comment. That being said, we do have a chat function, and if you're familiar, you can raise your hand. So if anybody has questions just from the public, you can type them into chat. We'll try to take them as we go. The other thing I just wanted to say, I know a lot of you are probably affiliated with particular associations and maybe doing business. We've got kind of a variety of carrier representatives, brokers, and actual representatives of associations. We'd really like to keep the discussion today focused on policy, kind of a little bit higher level. So rather than getting in any specific details of any particular arrangement or any particular company, we'd like to kind of hold that and try to keep at least the conversation today focused on a little bit higher level of what the rules ought to be, rather than maybe how they specifically might apply to anybody. So if you can just kind of be thoughtful on that, we'd appreciate it. Just to give a quick review, I think many of you have been engaged with this process, but probably over the last several years, the division's been doing some looking and working on what's going on with our association plan business in the state. Really, the driver of this, I'd say, goes all the way back to the Affordable Care Act and sort of imposing new requirements, including rating and benefits and things like that on coverage sold to small employers. And that sort of raised this issue of, well, how does that work when you have a small employer that's purchasing through an association? And how did that work with the existing standards in Oregon? And how do you sort of overlay these new federal requirements around risk pooling and things like that? So kind of where we're at today is, the division, we have a fairly robust association business. We're not looking to eliminate that business. That is not our hope or our goal with this. We're trying to find a way to make sure that, to the extent we have this business, or we may have new players that want to enter and start offering this business, we just want to make sure that we sort of got everything covered in terms of the requirements for small employers and healthcare coverage under the ACA and kind of what's going on within our associations. That's sort of the high level. Most recently, we had did a series of meetings in February at which the division sort of floated sort of its high level, I'll call it a sort of a straw proposal, which is more of truly a policy proposal, just to get some high level input. We got a lot of really good feedback that was super helpful for us on that. So thanks to everybody who took time to comment or provide input. What we have now today is sort of taking that proposal and really crafting it as proposed Oregon administrative rules. So we would actually adopt these as OARs. None of this is final yet. Again, that's why we're here today, is to talk through this, but sort of, again, getting kind of maybe another layer down in terms of the amount of detail that we're putting out there on how we think this should work and how this could work, how we'd like to see it work, and still looking for feedback from the group.
Michael?
Yes.
Hi, this is Karen. I just wanted to let everyone know that this meeting is being recorded.
That is a good reminder, yeah. So for the sake of sort of keeping track and good records, this is being recorded, so just kind of keep that in mind as you're commenting. So my thought, the best way to tackle this, I think what I'd like to do is just sort of start with the draft rule, and we can kind of pedal through it, and Karen will put up the text kind of on the screen to sort of keep everybody on where we're at. So that's sort of my thought, and I'm thinking I'm just probably going to go through it linearly, like we'll just start at the top and walk through it. And I'm actually the person that drafted this, so I can kind of talk about what our thinking was, why it's written the way it is, and kind of open it up for comment. That being said, I do want to just take a moment before we start that to just check in, and if anybody on the call is just dying to talk about a particular issue, or there's anything in particular that you'd like to just jump to first to make sure we get it covered, I'll sort of open it up to the floor for a minute and see, is there anything in particular that, rather than keeping people in suspense, is there anything we should just deal with right off the bat? So I'll put that to the group. Otherwise, my plan would be just to pedal through it. So I'll take any thoughts on that. If there's anything you want to get out of the way right off the bat, please feel free to unmute and speak up. And if you're talking, we're not hearing you. So
Michael, this is Jim Walton from Regents.
Hey, Jim.
I appreciate that you putting us, getting us all together. So thank you for doing this. I will say, I'm not particular about the order, but I probably have the most comments about subsection 3 and subsection 8 and how a lot of it works together. So a lot of my comments are going to be focused there. We don't have any real comments for section 1 and 2.
Okay. Anybody else?
Hey, Michael, this is Gary with Pacific Source.
Hey, Gary.
Hey, can you just give us a quick highlight of overall, it looks like the division wants to continue to have the health insurers filed the associations for approval. Was it discussed? And I thought it was discussed a little bit. Why not just have the association go directly to the division to get approval before they went to a health plan to get coverage issued? Get that approval prior going to a health plan.
Yeah, so I'll tell you my thinking on that, and I'm open to thoughts. My thinking has been that it's really at bottom what we're talking about. I think the core regulated activity here would be the issuance of the policy. Okay. And so to me, that while some of the materials and the evidence and the process that goes into that may, in fact, I think realistically in this space is going to fall on the associations, I thought it made sense to sort of keep the primary filing obligation on the carrier. And that's sort of how we have done it historically. The other piece of it, I think, is more maybe just practical is, I'm envisioning all this coming to us in the SURF system, which is sort of our filing system, probably as PDF attachments or whatever it might be. But I guess I was still thinking of it as, this would be the carrier's obligation to do the filing piece. Whether parts of that filing are ultimately the responsibility of the carrier or the association itself, things like, we'll get into this, I'm sure, but like the legal opinion and those things that can end up being really key. I think we're sort of agnostic to a point as a division in terms of who's actually providing that. I think what we're saying is we would want to see it and need to see it first before we gave the approval for the issuance. That's
Yeah,
sort
no,
of
I
thinking.
understand. I just remember from the earlier discussions, it was talked about putting the health plan, the middle position of, if the division has issues with the association or how it's structured or anything to that effect, you're putting the health plan in the middle of it by going through the certifying as opposed to having the association and division work directly to get to a happy place so that then the health issue or can issue coverage. And that's why I say, I know it's been brought up before, and as long as it's been taken into consideration, that's good, but I just want to make sure it was raised and discussed.
Michael, this is Jim again. I would just say on that, Gary, I would say from a policy standpoint, Regents, we were talking about that and what could potentially be another way of looking at this. Michael, would the department be, at one point when the draft came out, you had a place where the association could sign off on the things that they are delivering, were correct to their best opinion. We actually like that because there's some things that we're going to collect that we have no idea if it's, we believe it to be true. Could it be where there's an optional signature for the employer group or association, the employer association, to where if that's something the carrier feels that that's something that's good that we would like, could there be an optional place on the form where we're going back to the employer association and saying, here's what we're filing on your behalf. We just want something on the form to show indeed this is correct.
Yeah.
Because we get the truth with the employer associations is this, that we get new executive directors all the time. Sometimes we have new brokers or producers. Sometimes there's new carriers. It's good, I think, in terms of an audit piece to be able to say on an annual basis, here's what we believe to be true. Are we still on track?
Correct. Yeah. And so that was discussed and that has been thought about. And I think where we landed on the rule that you have is not that the rule would not be prescriptive on that. And that sort of maybe gets to the question about Section 8. And I kind of floated that out there to see what the reactions would be. And I would like to hear some of the associations on that. But I think what I'm trying to say big picture is I think where the rubber would really hit the road on that is when we get down to the actual filing transmittal. And I am open to, if there's consensus. I think the problem that came up last time was we sort of just did a draft transmittal, and the idea was the carrier would be filing that and signing that. And the concern we heard, which I think is valid, is there could be, you don't necessarily, as the carrier, necessarily want to be attesting to all of that if it's not material that you're ultimately providing or responsible for, including things like, things about like how the association is really operating. So I'm open to a conversation about how to split that out. If we can get to some consensus on here are the 5 things, 6 things, whatever the list is, and then we could go that next. If there's consensus on what those things are, if there's agreement on, well, here are the 2 that would come from the association and here are the 3 that would come from the carrier, I think I'm open to having that conversation.
Okay, thank you.
Yeah, but I am mindful of just the mechanics of the way our form and filing people do their business is through SURF. So I think the actual action of submitting it would likely still come through SURF and need to stay that way, is kind of what I'm thinking. And I'm not sure how we could separate the issuance piece by a given carrier. And I get what you're saying. Like on some level, we're saying, well, this association can be sold to, but I think we probably want to see the whole package, of both, the carrier piece and the association piece at once. I see Katie Brooks has her hand up. So assuming, I don't know if I've answered that last question, but Katie, if you want to chime in, feel free.
Hi, I just had a clarification in the first section. When you say the term employer association, it refers to a trade association or other group of employees. I'm assuming you're including chamber type or business type orgs in that.
Yeah, that might be a good segue. I don't know if anyone had anything else, but we could just kind of dive into section one. But I think to answer your question, Katie, was not meant to specifically line out a chamber of commerce. What I was really trying to do with the definition, I kind of didn't want to have to do a definition at all, to be honest, because it's hard to define exactly what is this thing we're talking about. But the one issue I know that came up was, there are more forms. There are a lot of different forms of these types of things. Include the big one I think I wanted to make clear is that we weren't looking to apply this to the labor union, which is really that last sentence there. And that comes up because it's just sort of a different setting. There's different allowances under federal law for union plans. So kind of really the key thing I was trying to do here was sort of say, we're talking about any sort of arrangement where you've got multiple employers that have some sort of affiliation and you're trying to issue it at that association level, right? A trade association sort of being the paradigm example, but
I understand. That works. Thanks.
Sorry, I don't want to.
No worries.
Forgive me if I'm talking you to death.
Okay.
It's a sunny Friday in Oregon. I'm sure no one wants to hear me talk about association health plan theory.
So Michael, can I ask a question on that vein? A follow up. This is Jeff Stone from the Oregon Association of Nurseries. I just for trade associations, I don't have a particular push on any changes of your document, but I just want to ask for my own clarification's sake. Trade associations, I mean, I have like my growers, right? And retailers, people that are directly lined up about, growing and selling of plants.
Mm-hmm.
But then there are, I think, increasing, let's say, doubt about people participating in association plants that might be considered associate members. So I look in terms of up and down the supply chain, right? So I have like fertilizer guys and I have transportation guys and all the soup to nuts of part of the production of the particular product. But am I right to think that those particular folks would be outside of any type of plan? I mean, I hope my folks who are our carriers don't hate me for asking that question, but they'll hate me for other things.
Yeah, so that's kind of one of the tricky issues, and I don't mean to suggest going back to what I said earlier. I'm not necessarily here to talk specifics about any particular association. I think there's sort of a big picture question on these arrangements of like, goes to the commonality, like how far can you stretch commonality of interest, right?
Right.
I think the answer to that question in these rules is and I think this probably kind of leads into stuff we'd look for in the filing, is we really don't have a great sense of where quite that line is right now. And part of, I think, what the rule says is we want to know better, both at the association level in terms of who would you accept for membership in the association generally, of those people you'd accept an association, which ones would be eligible for health coverage. And then, kind of the third step being, of those people, well, then who are they gonna, who are the employees? So you kind of have like three, you have the association level, the employer level, the employee level. So I don't know that we're saying any one of those is necessarily in or out. I think what we're saying is we kind of want to understand that better, and try to get to a place where we're all comfortable with it. That said, I think we have seen some arrangements where, they maybe were really pushing that envelope of what does it mean? If you say, I'm nervous, I don't want to throw out a trade.
No.
But there's actually an association out there.
Use one of my guys, because I kill plants, even though I'm their exec. You can use anything in the plant world as anything that would occur to you. It's okay. Yeah. I'm not gonna. We're recording anyway, right? So, no, I am thankful for this. I just want to ask that question out loud, and maybe we can talk offline. I mean, we have stringent membership kind of parameters, so. I'm not looking to explode that parameter because it all has to be related, but it may not match up to how you would relate it, through SIC codes or whatever that might form that might take. I'll stop and say I'm happy to talk to you about this offline, just so I could get a better sense, because I get questions like that from our members. So thank you for your indulgence.
Anybody else right now? So I guess I'll take it back to, so I talked a little bit about the definition. I don't know if that was completely answered everybody's questions, but yeah, I was just trying to make clear that we're really looking at, in so many words, we're looking at what I think the feds are calling AHPs, but we don't necessarily have that terminology in Oregon. So yeah, that sort of was the point of one, is to clarify the scope. Two, I think, is fairly straightforward, and this was pretty much right out of the draft proposal. So essentially, this is just sort of restating what I think the standard has been for Oregon. That you have to meet 73109A8. That's sort of our statute on associations. In addition to that, do the ACA issues, sub A would be allowed to act as the employer that sponsors the plan under federal law. So it's hard to say how far to go on that, because even that federal standard has swung. But I think what we're trying to say is, that you've met those commonality, and we'll talk about those in a minute. It's kind of ERISA requirements if you think about them that way. And then the last bit is just sort of almost a catch-all, and that issuance of the policy is consistent with this rule and any other provisions of the insurance code. So we can scroll down a little, Karen. We can jump into 3. And what this starts getting into is sort of the listing of the things that would need to be in the filing. So it says a carrier proposing to offer group health benefit coverage to or through an employer association must submit the following information. First one is easy. That's a constitution and bylaws. That's right out of statute, and everyone's been doing that. And then I'll do B, C, and D kind of collectively. So the B is sort of what we called in the policy proposal, like the statement of purpose. So our laws say you have to have a purpose unrelated to health insurance. So this kind of goes into the idea of being a good faith or bona fide association. So we'd be looking to actually kind of say, well, this is, if you have a mission statement, whatever it might be, this is what we're about. C would be the requirements on the employers, both to join the association generally, and if there's any additional, if you're only offering coverage to some subset of your employers, basically here's where you would call that out. And then D, kind of like I said earlier, is where we would get into the employee requirements. And I'll say that I realize a lot of those may not be that prescriptive at the association level. You may leave a lot of those choices to the individual employers in terms of who they want to sponsor, how that works. Again, that's fine. Not saying, we're just trying to get a better sense of exactly who you're offering coverage to, what the terms of that offer are, and just kind of how the whole operation works. E, then at the bottom of the page.
Hey, Michael, this is Jim again. Just a real quick point that some of my folks had is under a couple of those, I think it was under C and then capital B, where we're saying or A and B say clearly explain any additional requirements under that. And there's C, capital A, and B, clearly define trade, business, and industry. Is there a reason the word clearly came in there? Is there something that's not being done that you want to see done, or something different there?
It's a fair question. I don't know if I can answer that. I don't know if it's that. I think I was probably just trying to be robust and thinking ahead of myself and wanting to make sure that we got full and complete information, as opposed to, a very vague statement. So I can think about, that's a fair point. Clearly is a bit of a fuzzy standard, right? But yeah, my intent in writing it that way was more just to make sure that it was a complete sort of, you're not just saying sort of something very short and succinct of, well, we, like kind of the conversation with Jeff, well, we're a stuff with trees association or something where it's really unclear what the scope of that is. But I take your point that clearly is a little bit of a fishy word there. I can take that back and think about it.
Thank you.
Michael, this is Stuart Harris from Davis Wright. I'll be the English major in the group. I did notice in, what is it? It's in small b, 3 small b. I wonder if there was a typo. It says association. I think the word has was left out. So has been organized.
You are correct, sir. That is my bad. Yeah, it should read, the 3B should read a statement describing the purpose of the employer association and demonstrating that the employer association has been organized and will be maintained in good faith, primarily for purposes other than that of obtaining insurance.
Thank you.
Let's see. So, sorry, unless there's anything else on A through D, we can skip to E, and this is kind of, I guess, kind of where all the trouble's been, right? The way I wrote it is evidence demonstrating that for purposes of federal law, an ERISA group health plan exists at the employer association level. Consistent with guidance issued by the U.S. Department of Labor, the filing must demonstrate that number one, the association maintaining the group health plan and the individuals benefiting from it are tied by a common economic or representational interest beyond the provision and receipt of welfare benefits. So that's your commonality of interest prong. And B, the members of the association that participate in the plan will exercise control in both form and substance over the administration and operation of the health benefit plan coverage. That's a lot of words, and I'll tell the group we did. We've also had DOJ review this, and they had some technical edits, some style points that I think are very valid. So we may need to tweak that a little bit, but that would be more. This is the closest I think I can get to a concise statement of what the requirement would be. I think folks kind of know what we're talking about, but I'll see if there's any comments or feedback on E.
Hey, Michael, this is Gary, Pacific Source. It may help if there's particular points that you want us to be made in the evidence, or is there certain things you're looking for? Because it may help, you know, with any objections that may come through. Is it, hey, we're looking for the exactly 2 or 3 points to be made in our evidence. I think that's what helps, and sometimes that might historically cause problems. Oh, we meant this, or we're looking for this. You know, as best you guys can, maybe in the filing standards, it gets flushed out a little bit more of, to meet this, to meet the evidence requirement, we would be looking for example of something. Because right now it just says evidence demonstrating, and that could be broad.
Yeah. You know, I think the way we've said this historically is, you know, we need a legal analysis, you know, quote unquote, from an ERISA attorney.
Yeah.
Which, you know, it kind of just begs the question, right? What is the actual standard here?
Yeah.
I'm trying to be sensitive to the fact that the standards tend to evolve a little bit over time, and there's always new evidence that could come out. The other thing I'm trying to do a little bit is be a little bit agnostic of, I may or may not be successful in this, but knowing that the standards have changed a little bit, and that, you know, the Department of Labor could issue new regs or guidance or bulletins or FAQs tomorrow. So kind of where that line is of what the federal requirement is may move, but that, you know, the state standard is essentially would be saying you have to meet that, even if that changes beneath your feet. We as the state of Oregon would still need to know that you're remaining compliant with that.
Okay.
That said, I do take your point. It's such a fishy standard. It's, if I thought I could give you a clear answer of here are the 1, 2, 3 things that if you meet these, you're definitely going to meet it. If I thought I had those, I'd be happy to put them in the rule. I'm not sure what those are.
Yeah, I just want to prevent any type of sticking point with the reviewer. If the health plan says, hey, you've got enough here, and the reviewer says, no, I don't. Okay. Generally, we work through it, but just looking ahead, if you got new associations coming in.
That's fair. I'll I'll flag that, and I don't know if I can do much with it, but I appreciate. I hear what you're saying.
I think it's the filing standard form might be the best place, and not in the rule.
Yeah.
If
Okay.
Rick wants to take that on.
Any other thoughts on that one?
This is Jim from Regents again. I would echo Gary's comments on, especially on B. We just, I think for the most part that is happening. So I don't think it's a big point of contention that we think is an issue, but it's what regulatory people spin on. So they look at that, and what we all believe to be true today, or we think is true, will that hold in year 2 or year 3 when this meeting's forgotten and something else comes up? It's nice to have something a little bit more concrete that brings everybody back to the original intent.
Maybe a question that I'm hesitant to ask this, and I don't want to put anyone on the spot, but I'm wondering if, I'm assuming this one may often be answered in the Constitution and bylaws, or,
For the most part, yes. If they're going to bring they generally will have some sort of oversight committee or trust independent that makes these decisions, and I would hope for the vast majority of them applying, they would have that.
Right. Yeah, I don't do the filing reviews, but my sense is this is not the prong of the test that's been difficult. So, I think it's fairly straightforward that there's some sort of, employee level or employer level, they have a say in what the plan looks like. A lot of times it's done through trust arrangements and things. So I'll take that one back as well. I'll see what we can do on that. I appreciate the point. It's both the centerpiece of the rule and also very fuzzy. So moving on. So F, I sort of streamlined this one a bit because I think in our straw proposal we had asked for a whole bunch of sort of ERISA materials. I think the cleanest way to bake it down is to just say, I think what we'd like to see, and I think in some ways, I think I'm maybe mostly thinking of new associations here, but that we would want copies of the Form 5500 and M1s, the most recent. And then also I wrote in here sort of, well, if those aren't available, just an explanation of why. And I think that was sort of, again, thinking of if we're thinking about conceiving of a newly formed association, that hasn't previously offered health benefit coverage, then maybe they wouldn't have had those obligations, so they wouldn't have those documents available. But I'll kick that one out to the group for any thoughts.
Michael, sorry, this is Jen Baker with Providence Health Plan, and our folks were just wanting you to clarify, like, what would be a reasonable explanation on that. Again, it's a little bit of a fuzzy standard that we're not quite sure what what would be suitable. So whatever information you can provide, that would be helpful. Or if you want to move that to the standards, filing standards too, that would be helpful.
Yeah, well, I'm thinking well, and maybe this is, I'll ask the group this one. My thought is you should normally have these, unless, like I said, you're literally just starting. Like you haven't previously offered, you wouldn't have last year's Form 5500 if you weren't sponsoring a plan last year. So, I mean, the big exception I could think of is that would be the one is, well, yeah, we just weren't in business last year. But I guess I was hesitant to necessarily write the rule that way in case I was missing something. So maybe that's a bit of a question for the group. Is there another circumstance where an association, what we call an association Oregon, wouldn't have one or the other of these materials kind of handy?
I suppose this is Stuart Harris. If you were and I don't know of any associations that fit in this category, but a group of, say, churches who would then be exempt under ERISA. And if there was a church plan, they wouldn't have to file a M1 or a 5500. That's the only other exception I could really think of where someone would have a straightforward reason as to why those documents weren't available.
Okay. All right. Well, yeah, I'll take that back and see if we can make that. It might be cleaner to just specifically call out those circumstances, but maybe I'll just leave that with a question for the group. That is a good point on the church plans. If there's anything else anyone can think of, I just didn't want to write the rule in a way where there was some other sort of situation that I wasn't aware of. So.
Hey, Michael, this is Gary, Pacific Source. What do you guys do with the Form 5500 in M1? Because you're asking for it. Do you verify it or validate it at all? Or what's the purpose of that?
Well, we haven't historically because it hasn't necessarily been, well, it hasn't been a formal regulatory requirement. I don't know if reviewers haven't been looking at them. Part of it, I think, is probably like trust but verify. Making sure that everything you're telling us is consistent with what may be going into a federal filing. It's not that I think that there'd probably necessarily be a gap there, but it's more just making sure. And then I think, the big one I think is, well, trying to think through this, if I'm going to say this right, I think you would actually list, I think when you've got like an association plan like this on the 5400, they do list their members on it. And we just thought that might be a helpful tool to have in terms of knowing what's happening with that plan in terms of who's getting insured. It would hopefully buttress the information you provided about the types of employers that would be able to participate.
Okay, I would just throw it out there, the purpose of it. If the division is going to do anything with it, I would take it out of the rule because we're doing attorney attestation letters like we talked about in sub 3, earlier in sub 3. We're giving you a lot of information and statements. And so if, Form 5500 M1s aren't really doing anything, then we can at least consider keeping it in the rule or removing it. I mean, we can get them. We ask the association for it. I just try to understand the purpose that the DFR would want to see those.
That's fair.
And again, this is Jim. I think very much apparently like Gary. I agree on that point. Also, not to get ahead of ourselves, but on 6, when you're asking for annual changes, we wanted to make sure that you're not asking for a Form 5500 each and every year M1. That if that is not in your intent, that it would not be interpreted that they would have to give that to you every year.
The hesitancy there would just be the having to do that every year would get a little onerous, or
I think so. Yeah, I think, and I think goes back to Gary's point is if there is a distinct reason that that you're asking for it and you're using it for, if it's simply to confirm or to trust and verify, once that's done, does that need to be an annual piece or has its purpose then been fulfilled?
Hi, this is Tasha from DCBS. I'm the Life and Health Program Manager in DFR, and I can share that that form provides an important piece of information about the group's continued compliance with federal law, which I think requires annual filing. I could be wrong on that, but I think it requires annual filing of that. So for us, it just shows that everything remains compliant. There have been some groups that have changed or I guess stopped filing that, and that sometimes is a trigger that something's happening. So I would appreciate the information to come in for that reason.
Okay.
Wait, well, hold on, Michael. So Tasha, this is Gary. So you're just putting it in the file. You're not validating it. It's just supporting documents. Is that how you treat it? Like work papers?
So we review, because this stuff all is filed really under supporting documentation, we
Yeah.
review that pretty in depth. That's like a good portion of our review.
Okay. Because it helps me when I go to the association and ask them, says, no, it's really important that you get this to us because the state's going to verify it. So that's helpful. Thank you.
Okay. Yeah, I think we can look at that one, but we'll maybe table that one for the time being. The next section, so F is the 5500 in the M1. G is, so this is sort of wordy, but essentially what I was getting at here is we would like, and this was in the policy proposal, is to the extent that it's small employers that are being enrolled that are ultimately getting coverage to the association, we would like to make sure that the coverage is sort of at least equal to what they would get under a bronze plan. So, if they were actually purchasing in the small employer market. And so, that's sort of what this language of G is meant to capture. I'm hesitating because my thought and maybe hope is that this is not meant to be like a giant new difficult regulatory requirement. My thought is most of the associations are probably already satisfying this between, the way the large group benefit, I assume they're issuing large group benefits to the association. Those benefits should be hitting like the 60%, at least the minimum value standard for the large groups. So I don't think this is so much meant to be like a new difficult requirement, but the thinking is sort of one of the concerns I know we've heard about associations is there's at least the potential there to, you make the coverage cheaper by really dramatically undercutting the benefits, or, a skimpy benefit package that's a lot leaner than what you might find under the AHBs. So kind of the idea here is to just address that by making sure we at least have, sorry, my wife is walking through my house. Apologies, everybody. Trying to make sure that the benefits that are being offered to the small employers to the association are sort of, in line with what you might find, and we're not creating some kind of like race to the bottom or something, or incentives to have really lean benefits out there. That is the thinking on this one. I'll toss it out to the group. I'm hoping this won't be a huge compliance problem, but I'm happy to hear if I'm wrong on that.
Hey, Mike, this is Gary. This one, the only pause I had on this one is if the employer association has the bona fide status under ERISA, I didn't see where that would alleviate this requirement. Did I miss it somewhere in the rule?
Sorry, say that again.
If the employer association became the bona fide association under ERISA, would that alleviate from that association have to meet this benchmark plan 60%, or not 60%, but just the benchmark plan, because they would then be a large group? And that's the only question I really had on this one is.
Yeah. Well, I mean, I think what the rule is saying is part of us saying that does meet the requirement is that the benefits are at least sort of at that threshold. Does that make sense? So I see it your way, but I think what we're saying is no, we wouldn't we would look at this as sort of part of being, organized and maintaining good faith, is that you're essentially, at least the coverage you're offering through the association is, I'm not looking to do like a strict EHB compliance here, but that there's at least a sense of the coverage you're offering is roughly the same kind of coverage they could find in the small group market directly.
Right, but what I'm saying is if my employee association is bona fide and I get over my 51 eligibility and I have several small employers in there, can I still treat it as a large group, or do I have to meet this rule?
Yeah, and I think that's probably the tension. So I did say the straw proposal actually said you would have to be offering Oregon EHBs.
Right.
And so I don't think we're saying you'd have to necessarily meet the letter of the EHBs like the way you would like on a small group standard plan, for example.
Mm-hmm.
But what I think this would be saying, and I mean, I'm thinking of this as more like just an attestation, and probably a carrier attestation, that the coverage would at least meet these standards, that it's, I think I said substantially equal to Oregon's essential health benefits benchmark at an actuarial value of at least 60%. So it's at least as good as a bronze plan.
Okay, I'll have to think about that one. Thank you.
Yeah, and like I said, my goal in this is not necessarily to say, well, you've got to cover EHBs, but I want to be able to say, well, yeah, they're not dramatically getting cheated out of any EHBs, maybe is the way I'm thinking about it.
Michael, follow up.
Sure.
Jeff Stone here again. Sorry. Are you planning on doing a small business cost analysis as this part of the rule? Because we have a lot of small members. So I was just because I worry about cost increases that are inadvertent.
Yes. So that would be part of this. We'll talk about that. We'll do, we call them SNP.
I'm sorry, I'm all over the place, man. Now you know what it's like to be with a meeting with me at all times. I jump ahead chapters.
Well,
so apologize.
No, you're not at all, sir. You're fine. So yes, we would have to speak to that. And I guess part of my ask on this one is, like I said, I'm hoping that this one doesn't create some giant need to change the benefits. My thought is my hope is that the associations are probably already hitting this, that they're probably built off large group benefits, and that there shouldn't be this situation where there's, where it would be significantly leaner than the EHB package. But if I'm mistaken on that, then I think that's definitely something we'd want to hear about from the carrier folks or the association folks, whoever's got that information.
Thank you.
Hey, Michael, it's Steve Rubino from United. We've been talking about avoiding using some words that might be difficult to understand exactly what the intent is. I mean, we start using the word substantial or significant. It's like, what does that mean? I guess going back to Gary's concern, I mean, is the intent to, I think you said the intent is not that these plans, meet the EHB requirements. Is the intent really just ensuring that these plans meet the minimum value requirement, the 60% actuarial value, but not necessarily having to comply with EHB standards?
Correct. Yeah, but I think the ambiguity in what people are, is I'm not quite sure exactly how to say that, in terms of what the rule needs to say. But I'm trying to I want something in the rule that makes clear that, the coverage that's going to be offered through the association is more or less, it doesn't, maybe not to the letter of the law in the way you would look at EHBs, but that there's no reason to think that I'll say it as bluntly as I can. If a given small employer is getting a cheaper rate on insurance through an association, I don't want that the cheaper if they're getting something cheaper through the AHP than they can find in the small group market, I don't want the reason for that to be that the benefits to the AHP are much leaner. That's what I'm trying to say. And the cleanest way I could say that is, yeah, it's at least would equal what you would get in a bronze plan.
Okay, yeah, definitely something to think about.
Yeah, I'm open to feedback on this one, I guess, but that's sort of the concept I'm trying to get to. I don't, again, like I said, I'm thinking this shouldn't be a problem, but maybe that's the ask then of the carriers is see, would this be, if this rule were out there now, would this be problematic?
Hey, Michael, this is Rick Berry. I think the intention at the time was to peg this, and I think this is kind of what Steve was getting at, to the federal definition of minimum essential coverage. I mean, would it make sense to embed that in the rule? Is that possible?
So yeah, I mean, I said actuarial value, but I mean, the tests are very similar, but you could also say minimum value here, which is sort of the large employer test, which comes in with like the large employer mandate.
And that might be, this is Steve again, that might be a cleaner approach, is just to say if this is an association that has, more than 50 individuals or 50 employees covered, that it has to meet the standards of a large group plan.
Sorry, I'm writing that down. So perhaps a better way to say it that I'll float is, in lieu of saying has to meet the EHBs, what if it was more like has to provide coverage in all 10 categories of the EHBs, right? Without being prescriptive, but just identifying the categories, which, hospitalization, emergency, sort of those big bucket benefit categories, without necessarily pinning it specifically to the small group benchmark, but just saying, you have to at least cover hospitalization, inpatient, outpatient, pediatric, et cetera. So I'll offer that as a thought of one other way to do this.
Yeah, Michael, this is Gary. I think if we can point back to the feds, kind of what Steve was hitting on, it might make it simpler for us reading it. Just looking at the way it's written now, if you're not part of this meeting, you may not get the same interpretation. So that's just my thoughts on it. But I appreciate you discussing with it.
Okay. I'll table that, and then I think we can do H really quick, which is just, this is sort of our catch-all. This is just saying any additional information requested by the division. And the intent there is not to, we're going to bring in everything in the kitchen sink under this provision, but this is just sort of to be kind of our catch-all that if we need supplement or more information, that the division would have the ability to ask for that on a case-by-case kind of basis. All right. How are folks doing? Do people want to just keep pedaling through, or would people like to take a little break? We're at 2 o'clock. Any opinions anyone wants to throw out? Have I talked you to sleep yet?
I say let's keep going.
Yeah, I'm good.
There's momentum. All right. I will keep jabbering. So on 4, subsection 4, so 3 is essentially all the stuff we'd want to see in the filing. 4 is the non-discrimination provision, and this was one that we had put in the straw proposal. got a lot of comments on this, actually really good and thoughtful comments. So thanks to the folks who provided those. The concern with the way it had been written in the straw proposal wasn't really our intention, and honestly didn't realize we were kind of tripping that wire, but they added some language around non-discrimination in the federal AHP rule that I think has proven somewhat problematic. And the issue is, I think it's safe to say it's at least unclear how that might change the way that rating practices are being done. Specifically, like once you have an association, if you're going to assign different rates on the employer level, and whether that would be considered discriminatory or not. So really our goal originally, and the way we've been thinking about it, is essentially what we're talking about here are Pathway 1 associations, if you use the DOL. So these are the kinds of associations that could form even before the Trump AHP rule passed. So, and the DOL has said that they don't apply, whatever that provision may or may not do with rating, it doesn't apply to the Pathway 1 associations. It's sort of how I understand the feds landed. And that's kind of consistent with what we're doing. The reason we wanted to add this was to just kind of make clear that we didn't want any sort of, I'll say, cherry picking or other sort of risk-based selection being done either at the association level or at the at the employee level, so that you're endeavoring to offer, you're a trade association, you're offering coverage to everybody that's in your trade. There wouldn't be an additional layer of limiting the eligibility or singling anybody out, to try to get a better risk profile. That's as far as we went to go with it. It does not meant to prohibit assigning different employer rates to different employer members within the association. It's really about eligibility and any sort of discriminatory behavior that might be favorable to the plan by preventing higher risk or higher cost individuals from enrolling. I hope that makes sense. Sorry, it's Friday at 2 p.m., so I may not be saying that as thoughtfully as I meant to, but I hope the rule text speaks for itself on that one, that we're not looking to outlaw the per employer rating. So any thoughts on that?
Michael, it's Jennifer from Providence again. And so I do just need a little bit of quick clarification. My folks asked me yesterday as it relates to this second section or second sentence of section 4, where it says this subsection does not prevent an employer association from charging different premium rates to different employer groups, provided the methods used to establish each employer's premium rate are consistent with 45 CFR 146-121. So consistent with federal law, that particular federal law, you're saying basically, I just want to make sure it's clear. You're saying you can rate groups differently, but you can't rate somebody specific. I guess I'm trying to understand what compliance with or consistent with that particular federal provision means to you. And are you just talking about not rating individuals differently based on their health status, correct?
Correct. So I think that this would basically be going back to the HIPAA health status non-discrimination and applying that standard to the association. So the two things I think that you couldn't do that would be inconsistent with that rule are list billing, meaning each person has their own rate assigned to them, and the other one is if you were any evidence of essentially singling a particular individual out. So you say, well, all of you people are eligible, but this one particular individual isn't allowed to, we would put you in your own group or something and then try to assign the rate differently to that group. But if you're in the business of you have a way that you just rate all the employers within the association, we would not be looking to prohibit that type of conduct. I don't know if that totally answered it. Sorry.
I think so. Thank you.
Yeah. Yeah. Sorry. Anybody else on that point? Am I making sense? Sorry, everybody, if I'm getting jumbled.
Hey, Michael, this is Gary. Can you clarify about, are you expecting all rates to be tiered then? Is that? Because there's no list billing, right?
Right.
Okay. Make sure I heard it.
At the enrollee level. And that's, yeah, to be clear, that's because that's already been the standard under 146, 121.
Okay, thank you.
Yeah, and I think and hope that that means you wouldn't have to change anything that with the rating. And the way we've talked about it is if you meet the other standards, the federal compliance, the commonality and all that stuff to be an association, then essentially nothing should change with the rating with how it's been done historically. We wouldn't really look at that. I think the way that I would see this one sub 4 is that would basically be like a carrier, possibly a carrier and association attestation, but just sort of saying like, yes, we're not doing any of those things.
Okay, just wanted to make sure I understood it. Thanks.
All right, we're getting through it. 5, association must not allow working owners to enroll. So this has kind of been our standard anyways, and we said this in both of our bulletins. So this is basically just putting that into the rule to make that point clear. You know, we're talking about small businesses, meaning consistent with what I think we do in the small group market, you've got to have at least one common law employee, right? Yeah, you can't just, if you're just you as an individual, then that would still be, we wouldn't look at that as a business, we would look at that as an individual, and that person should be in the individual market. Similar to what we've done on small employer, you've got to at least have the one common law employee. That makes you, you know, that's my employee, now I'm an employer, that's what would put you in. So it's this, hopefully should be the same standard that we're using in the small group market directly. All right. 6, at least annually. So yeah, I think this one came up before. It said at least annually a health insurance carrier offering group health benefit coverage to an employer association must inform the division of any changes to the information submitted under section 3 of this rule. So this was meant to kind of update the idea of sort of the change filing. And the idea that I think that's been a concern for us is, you know, the statutes say that the associations are supposed to keep us notified of any changes. That hasn't always been happening. You know, we have some associations that came in at some point in the past, got approved, and we have never really heard back from them. We'd like to move away from that model because we are worried about kind of scope creep over time where, you know, maybe you were approved under one standard, but then, you know, things drifted, changed, and you may still have a plan out there that's still operating under standards that we wouldn't necessarily apply anymore. So my thought on this one is it could be sort of straightforward. It could just be sort of an annual update filing. Maybe 9 out of 10 of them are just no changes, but we would expect there to be that touch point at least to say, you know, yes, we're still operating the same way. No, we're, you know, still accepting the same group of people, still the same terms, nothing's really changing. Hopefully that could be a very perfunctory to sort of check in with the division annually. At the same time, we're hoping that this, if there are things that have changed, you know, this would be the opportunity to notify us of any of those changes. And mainly, specifically things under 3. So like the things that we're asking for under 3, we're sort of thinking those are the things that, you know, we'll need to know if we have a good faith basis to sort of approve the association. So it's really anything material changing with respect to those items that could then change the analysis about, you know, the bona fide and the approval and things like that. That's sort of how I'm thinking about this one, but I'll take any thoughts or comments on that.
Hey, Michael, this is Gary with Pacific. Is this like an informational filing and serve? Is that, am I understanding that correctly?
I'll defer to Tasha on that, but I think yes would be my answer. That, well, assuming there weren't major changes that necessitated kind of re-triggering the analysis and the review, I think it would probably be a pretty, I'm thinking / hoping it could be a pretty perfunctory, yeah, no changes, for this year.
And do you have an idea of what time of year you're gonna want this? So like a due date, July 1st or end of the
Yeah,
year?
maybe that's a question I had. I just said annually.
Yeah.
Um,
It helps if you give us some date that we can work from.
Well, yeah, I guess my question is, would it be better for folks to have all these due at the same time, or would it be cleaner to do this like on the renewal, the anniversary date? On a group by group basis. Maybe those end up being all January 1s anyways, but
Hmm. Maybe prior to renewal, 60 days before the is
yeah.
it plan renewal or is it 60 days? I don't know. I mean, we're kind of open on this one. I think prior to renewal would help.
My assumption is that if changes are getting, the majority of changes, if there are any, are going to take place particularly anything around the coverage would happen on a plan year basis. So then it may be, yeah, it might be it might make sense to just have that as part of your renewal activities on an AHP every year is, oh yeah, we got to file that thing with the division kind of thing.
Yeah, I'm just thinking, Michael, if the division comes back and they have questions on that filing, that there's enough time to address those. And that's why I was trying to think if you give us, 90 days before the renewal, the plan's renewal, or some type of grant like that. I don't know if Tasha has a preference, but if you guys can work in something, that would help prior to maybe work from the renewal date of the plan.
Yeah, I hear what you're saying, Gary, and I'm gonna confer with Rick Barry, and we'll work with Michael to get something in there.
Okay.
Probably closer to 90 days, but I also want to respect that this is also a process that's going on like simultaneously with a whole bunch of other things happening, and I don't necessarily want you guys to have to like extend that process by starting 30 days earlier just to get us the information or something like that. So I'd like to think about that, and if folks have thoughts, let me know. But aside from hiring more staff and cloning Rick, I'm not 100%
Well,
sure. So
this is Rick Barry. I would say I'd at least like to consider the possibility of an annual specified filing date. I think that we could work into it over a few years period of time, but if the groups could be synced up to have a particular filing date, I think that would make our workflow easier.
Okay. Yeah, like I said, we're not married to anything, but if we can weigh in, we love to.
This is Jim from Regents. I like an annual where the same reports are getting pulled from everybody, and we could create some consistency with our associations that they know if we need some data from them that we're going to have a call for that data prior to, and then everything comes in at once. Otherwise, as the underwriters prepare the renewal, this will be something that becomes part of their process of being able to have this in. They're going to have to request it. Even if it's at 90, we're going to have to request it 120 to 150 days out if there's changes, so that we give the associations time, and then we have to get it, and then we have to be able to file it. So the tail on this will still be fairly long.
Yeah, no, I agree with Jim there. I just,
So just to make sure I understand, Jim, you were saying have everyone pick a particular time of year and have everyone do at the same time.
Hey,
right?
January 1, everybody's going to, it's going to get filed on January 1. That way we can work back to say to our associations, hey, by November 1st, we're going to need this data, or November 15th. We give an opportunity to see it, scrub it, and before we file it with you. Nobody wants more to do in the fourth quarter. I know that. And so if we want to make it July 1, it's not that I won't be opposed to that. But I think a date where we can work back from so that we're filing, I think we would be more would be more in favor of just one date rather than having to do figure this out for everyone that we do on a separate time frame.
Yeah, we can do that too, Michael. There's no problem.
This is Jen for Providence, and we would probably be more aligned with that as well to provide more consistency. Going back to all AHPs, then know what's required of them at the same time.
Yeah, it becomes a regular cadence. I like that.
Yeah, this is Sadie at Kaiser. We would support that as well.
Internally, this is Rick again. The ACA is still a thing that exists, so July 1st might be kind of a problem. But yes, otherwise, I agree.
Yeah. Yeah, we can puzzle on dates, but I appreciate that feedback on how that would work.
I don't know what this ACA you speak of, but no, I think just for Providence perspective, it's consistency.
Agreed. If you want to make it October, make it October. It doesn't have to be July. It doesn't have to be January.
Right. Yeah. 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 I'm just trying to think through then. Yeah. Like I think you said, Jim, if we say 90 days out, or we pick a date, you would actually be needing to reach out to all your associations 90 days prior to that. Right.
Correct.
So yeah, I try to hit. Do we have 2 lulls in our annual cycle? But we'll puzzle on that.
Okay.
Anything else on that one?
Michael, this is Stuart Harris. Earlier we talked about this one and whether that requirement would necessitate an updating of the 5500 and the M1. But I mean, as I'm reading this now, I mean, if it's only the information submitted under subsection 3, then that really doesn't answer that question, that this doesn't encompass a need to provide a 5500 just because maybe something on the 5500 changed.
Well, I think just the way it's structured, the 5500 and the M1 are 3F, if I'm looking at it correctly. So this would, I think the way it's written currently would suggest you'd need to do you would have to file those documents annually.
Oh, okay. Yeah, no.
But that's how I would say it's written now. That's not saying I'm married to doing it that way.
No, I agree. I see what you're saying. I'm kind of was misreading the subsections there. Okay, yeah, you're right. That is part of that. Okay.
Yeah, well, I mean, I don't want to say. I'm thinking about that one. One option may be as simple as I know a lot of those. Some of those filings are just available publicly, so it may be more like we just need to know the name under which you're filing that to make sure if we wanted to look at it, we could pull it ourselves or something.
True. The 5500s are readily accessible to the public.
Yeah. So maybe it doesn't necessarily, if the concern is just the paper shuffling, maybe a cleaner way to do it is, just let us know how you're filing the 5500 and we can pull it ourselves. Just throwing that out there. I don't do this work, so I don't want to write any checks, but it may be, if that's cleaner, I wouldn't have a policy-based problem with it. And sub 7. So this is my distillation of the conversation I think we've had about transition plans. So this would be, the intent here would be, we talked about up to kind of a 3-year period. So I think you have to kind of separate new associations that might form in the future that may come in and be subject to this right from the start. But we know we've kind of got a big cohort of existing association business. So the idea there would be, the way I wrote this is the requirements, whenever this rule passes, the requirements apply to you upon renewal. But if you're not able to get there by the time of renewal, that's where the transition plan would come in. So there'd be like a 3-year, you could file a transition plan. Basically, we'd have a conversation with you. We'd talk about, kind of what your pain points are and figure out a way, hopefully, by dragging out the timeline for the compliance, that should give you time maybe rather than having to snap to every letter of this, overnight, over a period of year, up to 3 years, we said, that would sort of give you more of an on-ramp or off-ramp, depending on how you think about it. Just try to embed what we had said in the previous document, but again, open to any thoughts on how this is written or if this gets to where we need to be.
So Michael, this is Gary. To clarify, if we have an existing approved group and once these rules become effective, we would just then be doing the annual filing as we were just discussing in sub 6, right? Am I reading this rule correctly?
If you have an association that's already out there that is is already doing the things that we're saying here, I think the only piece might be making sure that we have those other, to the extent this would require like the employer statement and the employee statements and things that maybe you haven't actually filed before.
Okay.
You'd have to go through getting those, I guess, filed with us, but then, if you've got an association that's already meeting the substance of everything here, then yeah, I think you would just move to just keep letting us know that you're there.
And this is Jim. If we're talking about sub 7, I guess the question I had was, will some, if you're not in compliance, do some associations get 1 year? Do some get 3? How do we know who gets how long to do this?
So yeah, I guess I'm envisioning that would be a per, association kind of conversation. And I know that might be a lot of lifting. My hope is that, the majority will, be able to get there and we won't have to do transition plans with every association that's out there. But, I think you'd have to kind of look through your business and say, do we have pain points? And then I think that would be a conversation with the division. We're saying up to 3 years. I think it's just something we would look at on a case-by-case basis. Again, with sort of kind of a dual goal for the division is get everybody on the same standards and get one standard out there while also being sensitive to, we know we've got different groups out there that have been operating and not wanting to just be prescriptive and say, yeah, you all have till X date to get there. Anyone who doesn't is out of compliance and we're going to shut you down or something. We're hoping to try to do a bit more of a glide path of getting everybody on the same page in this segment.
Okay, I just want to make sure that we have if any of us have one that is really out there, I really don't want someone out there for 2 or 3 years who's not where, because I agree with you, Michael. The whole thing that interests me about this is a level playing field. Everybody's operating on the same rule. Everybody knows what that is and we play by it. I love that. I think that is something that we've needed to have in the marketplace. And I'm glad this is happening. I just want to make sure that the runway to where we truly get there happens as quickly as possible. Because by and large, we're on board with the real changes. We think, as long as everybody's abiding by this, then we have a really good, healthy market for association health plans.
Yeah, I mean, my hope is everybody could get there in like a year.
Yeah.
But until we see it, we won't know, right? So I think the farthest I think we're going in the rule right now is saying we won't go past 3 years. I don't think it's our goal to always go to 3 years either, right? But it's just kind of going to have to be, and I think that's probably a good lens as that we become more aware of what those things might be is, it could be a staged plan where the biggest pieces or some of the big pieces need to go first to try to get to that level playing field as quickly as we can.
Hey, Michael, this is Gary again. It may take 2 years for most of these because if you change the association, then all those member groups that are renewing under it, they may not all be on the same date. So just to give you a little insight there, is 2 year may be more of a more common practice.
Fair enough. That makes sense.
All right.
And Michael, this is Stuart Harris again, again playing the English major. I think there's another word that's maybe left out in the second line where it says the requirements of this rule become on the first date. I think what you meant to say is become effective on the first date of annual renewal. Does that make sense?
Michael? Michael, you're on mute.
Oh, sorry. I had said agree with that edit from Stuart and appreciate that. And then I was saying on sub 8, this is the sort of the piece we talked about. And this was trying to be sensitive to that need to sort of balance, well, which pieces are coming from the carrier, which pieces are coming from the association. And again, I think we're open to talk through when it gets to the attestation piece, which party should be signing off on which piece. But kind of like I said at the start, we're thinking of this as primarily the carrier will be doing this filing, but then this subsection was meant to clarify that, that we would sort of be agnostic as to, you as a carrier could say, look, these are the requirements of the associations. Before we can write you, here are the things we need from you, and that could sort of be worked out between the parties. I hope that's a workable solution. It's certainly workable from our perspective because we get to play agnostic. But if that raises concerns or doesn't work, I'm happy to hear about that.
Hey, Michael, this is Gary. I mean, this is from our experience. If we have to go back to association or the broker and get information, sometimes it does take a while. They don't operate the same speed that we have to respond within certain days to a filing. And I know we can get extensions, but it's one of those things that I know with our company, we get a little cautious on answering on behalf of the association. So we always go to them and have them prepare the information. What I'm trying to say is I still like it if the associations can somehow engage more on that CERF filing in some manner. And then they can address appropriately on their behalf of their articles or bylaws or whatever it may be. But I don't know how that would be done. You'd have to add them into CERF.
Michael, this is Jen, and I would back Gary up on that one. I definitely think that it can be a challenge sometimes because sometimes you're going through a broker, sometimes you're going directly to the AHP. It's helpful if we can be more collaborative here.
Yeah, but what would be interesting is if the associations could say, are they comfortable with health plans responding? Or, I mean, that's
yes, and yeah.
And this is Jim. This is our from Regents. This is our point of view as well. We think with the information being asked for, I think there is a reason to be able to say, we will ask for it, and we will still gather all the information. I don't think we're looking for the division to be responsible to contact the association directly. We will do that, but I still think there's whether it's optional or on there, some sort of acknowledgement that what we've put together is accurate, true, complete, all of that.
Sorry, I just want to be, you're saying that would be on the association, to a sign off from the association?
Yes.
Right.
Yeah, correct. I talked about that earlier in the meeting,
yeah.
But and it's just circling back to 8. I'm saying it again.
Got it. And Gary, I was going to ask you, are you thinking more about the annual update filing or the new filing, or just both of them together when you originally commented on that?
It's usually the initial filing. I mean, once
right.
when we get data calls or things from you guys, going back to the association, getting M1s and 5500s, that's not too big of it's that initial filing, especially if it's a new association. And the division has questions about the articles for us then to go back through the association. They may go seek their legal counsel and have their own meetings and discussions. And they may be only monthly or whatever it may be. Sometimes it gets to be a little challenging to timely get it back. And so that's why I've been trying to think of a way that we could partner with an association and do a filing together, and they can hit their pieces and we hit ours, but I don't think that's possible. I just know as a health plan, we caution about saying, agreeing to things or changes or anything like that on behalf of the association. We don't represent them. We're just selling them a health insurance plan.
Yeah. Yeah, I hear you.
But to get statements,
is the concern around the statutory time frame, the 60-day statutory time frame as it would apply to this? Sorry, this is Rick.
Which 60 days are you thinking of, Rick? You mean for the division to approve it, or?
Yes. Yep.
Oh yeah, I think the concern is more the work that the carrier and association have to do to even get us a filing, and who's on first there for the different pieces, because some of it is more carrier stuff and some of it is more association stuff. If I'm understanding it correctly.
I think it's any of the follow-up from I know for Pacific Source, it's that piece. Getting it, we gather everything initially and then we submit it. It's if there's additional requests for information or the statements. We forgot to add a statement, something to that effect. That does what takes time. I don't know what the other carriers are, but generally we gather everything before we submit it. And so this helps us probably get all these statements. It's after the filing gets started and the DFR is working on things. That's when sometimes it gets slowed down because you have to bring in more parties.
Mm-hmm. Yeah, yeah. I mean, part of what I hope the rule does is kind of say, look, these are the things on which DFR is going to make its decision, and the thumbs up it or thumbs down it, or if we need to add something to the rule that there's more information we think we would need, then that should be in the rule now. But hopefully, we get more to a place of this is what an association filing looks like, kind of for everybody.
Right, Michael. And I think it comes down to when you start asking for statements from us, that's what starts bogging things down. We can get you articles and the 5500s and M1s, but in the rule you want statements to this, statements to that. That's where it gets a little more complicated.
Right, because now you got multiple layers of wordsmithing across two different organizations.
Yeah, and we got attorneys getting involved and they want to say things a certain way and who has to legally sign off on it and things like that.
Yeah, my thought is maybe we could do a more elaborate, I'm wondering if we could streamline that a bit with how the transmittal is structured, if it was more bright line, yes, no's. I don't know. I'm not saying we can or can't, but I can think about that rather than having an open-ended statement, right?
Yeah. Hey, I mean, if we can do something in the product standards, I think we like that. If it's boxes, whatever. It's just that to me, with the health plans, it's the signing off on things, making statements, having officers sign off. That's the challenges. I don't know for the associations what they find as challenges, but I know for the health plan, at least for Pacific Source, it's our filing technically in SURF, but yet any changes or questions are going to be about some other business entities and their paperwork.
Yeah, sorry, I'm talking a lot with the carrier folks. I apologize. I don't mean to. I'd love to hear from associations on all of these points as well, in terms of, you know, what that might look like. Okay. So it is 2:36. That is at least kind of walking through everything that's in the draft rule. I guess my next thought is there anything we didn't cover, or are there any other questions or comments or anything anyone wants to say just globally about anything of the rule or anything like that? And then I'll venture a statement, which is I think I'm hearing some general consensus and comfort. I think we probably got to do some tweaks based on today, but the big picture of what's here sounds like folks are comfortable. I see Del Johnson, you have your hand up.
I just wanted to know who we would submit questions to if we think about this over the weekend. I'm sure we're all going to focus on it. So, kidding, but I'm wanting to know who we should send our written questions to in the next couple of days.
Yeah, so, oh, sorry, I didn't cut anyone off there. My thought was, you know, I know this is a lot, and I know it's, like I said, it's late on a Friday. So my thought is if we could get, I don't want to kill any discussion today, but if we could get kind of comments back from, you know, maybe formal comments, or if there's any specific language changes, if we could have those, I'll say by the 21st, then, you know, we could at the division take that back and try to turn it around. I know we've got, well, I guess we've got Memorial Day coming in, but try to have a draft of compiled feedback by the 28th. So your comments to us by the 21st, us owing you back a revised draft by the 28th. And when I say us, I basically mean me. So you can send your comments to myself directly. My contact info, if you don't have it, is in the agenda. And then also Karen Winkle helps with the rulemaking. So please CC just send it to both of us would be probably the best.
Okay, thank you.
But I think I'll float, you know, the next steps for this is to actually commence the official rulemaking process. That would sort of kick off in June. And I'm, you know, I mean, obviously I'll wait and make sure from the comments that there's no huge issues that we didn't have a chance to vet, but sort of my hope is we could just kind of work through email comments, and hopefully there's a general consensus here and we can kind of push forward to start the rulemaking process without specifically bringing this committee back together again. Don't want to, I want to push it because I'd like to get the work done, but you know, if folks are really uncomfortable with that, you know, speak up, but I'm just hoping to kind of get this done in one meeting. I know there's probably more questions to answer because the next phase then is once we have a final draft, we would actually commence an official rulemaking process. There'll be opportunities for public comment during that period, both written and there'll actually be a public hearing that you can attend. To, you know, if there were more issues that come out of the woodwork, you know, so there will be more chances to weigh in on this, but just kind of the next step formally for us would actually be commence and schedule a rulemaking hearing. So I do want to check in. I know we don't have a lot of people who aren't committees, but just if anybody's on, we did have public comment on our agenda. So if anybody has been waiting and hasn't chimed in that would like to, please, now would be your time to speak up if you wanted to provide any public comments. And then the only other thing that I have to do is we have, so this kind of gets at the questions about, you know, the small employer impacts. This is one of the materials you have. This is called the Statement of Need and Fiscal Impact Worksheet. If we scroll down to where we start talking about Statement of Cost of Compliance. So this is a document that we have to put together as the agency. You question one, I think, is fairly straightforward. That's something we can draft. I don't see, this is really sort of codifying a lot of what we were already doing. So not so much worried about one, but then on two, we would be looking for information on the estimate of the small businesses and types of business and industries of small business subject to the rule. And then the sort of the projected cost, reporting, record keeping, and other administrative activities required for compliance. And then any equipment, labor, and increased administration. Also would need to talk about how are small businesses involved. My thought on that is, we've had both agents and some actual small employer groups that were on the rule. But basically we'd be looking, and I know some of this might depend and folks need some time, but any information as you kind of dig into this and think through it about how this might affect the small employers. My hope is, since we're not really doing anything with the rating, that we won't be looking at big cost increases in terms of premiums and things like that. But basically, I have to ask for your feedback on these. So any input you might have, if you have anything now, happy to hear it. Otherwise, you could include that in any comments that you follow up and send to us by the end of next week. That'll be May 21st. And unless anyone, we did have a question in the comments, will somebody be able to review the meeting? Yes, we do have a recording. We will make that available on our website once it's available. I'll probably just shoot you an email to let you know that it's out there. And I think, unless anyone can think of anything I'm missing, I think unless there's anything else anybody wants to say, we can probably adjourn. Going once? I'm not on mute, am I?
You're not.
All right.
You're good.
Then I will take silence as agreement, and we can dismiss the meeting. Thanks, everybody, so much for your participation. And let me know, like I said, please, you can send the comments straight to me. Anything else you need, you can reach out to me directly, and we can try to work through it. So thank you much.
Thank you, Michael.
Thank you.
Thank you.